Hi friends, in this video we'll learn the treatment of the accounting treatment of income received in advance or unaccrued income. There can be situations where the business may receive some income even before it has earned it, or even before providing the services. The business receives some income from the other party. So how to deal with it? I'll give you an example to you. Let us say a business is having a building. A building is given on rent. The rent is, let us say it is rupees 50,000 rupees per month. On 1st April 22 we give this building on rent. Our accounting period is, that is the period for which we prepare our accounts for each year, is from 1st April 22 to 31st March 23. The tenant, what he does is pays rupees 12 lakh immediately towards rent for 2 years. So what he is saying is, instead of paying you monthly rent, I will pay you the entire 2 years rent in advance. So he gives the business 12 lakh rupees rent immediately for 2 years. So on 1st April 22 we are receiving the rent, but this rent is for 2 years, from 1st April 22 to 31st March 23, and from 31st March 23 to 31st March 24. So I have received this two years rent, that is 24-month period rent, which is rupees 12 lakh. Now we know that my accounting period is 12 months. So out of this 12 lakh, income for this period of 12 months will be treated as an income in this year, and the extra amount which we have received cannot be recognized as an income for this accounting period because it does not pertain to this period, it pertains to the next accounting period. So how to deal with it? Let us see the scheme of entries we are going to pass. When rent is received on 1st April 22, what we can do is, for rent of 1st April 22 to 31st March 23, I'll pass the entry bank account debit 6 lakhs to rent income 6 lakhs. I'll credit it to income because this is for this accounting period. Okay. For rent received in advance for 2023-24, for the next year, this entry I'm passing on 1st April 22. We have received the money on 1st April 22 only for both the years. So I'll pass the entry bank account debit 6 lakhs. But this money is not an income for me, it is not an income for the business. It is like a loan given by the tenant to the business. So till the time the period lapses, we are going to treat it as rent received in advance. 6 lakhs rupees. So on 1st April 22, we are not going to show this as income, we are going to show this as a liability. So what is the logic here? Bank, personal account, receiver of business money, hence debit, or we can say deposit, that is why it is debit. Rent received in advance, nominal account, not nominal account, sorry, representative personal account, it represents the tenant, personal account, giver, credit. We have to treat him as a person who has given loan to the business. Okay, so now what will happen in the P&L account? Rent income, P&L account for the year ended 31st March 23, that is at the end of the first accounting period. Rental income will be shown in the P&L account, credit side 6 lakhs. Balance sheet, rent received in advance, it's a liability for the business, hence it will be shown on the balance sheet, liability side. So this is how we deal with it in the balance sheet as on 31st March 23. Sorry, not 22, 23. Now what happens in the next accounting period? That is on 1st April 23. What we'll do is we will reverse this liability and we will shift it to income. Rent received in advance account debit 6 lakhs to rent income account 6 lakhs. Now this money which belongs to 23-24 will become income for the period. So when income received in advance is recognized as income. So this is the entry we pass when the income received in advance becomes an income. I'm finishing off the liability and I'm showing it as an income. So this is how we deal with income received in advance. I'll show you the scheme of entries once again. When income is received, we normally pass the entry bank or cash account debit to income account. When income is received in advance, what should we do? When income is received in advance, we cannot show it as a liability. We should show it as we cannot show it as an income. We have to show it as a liability. Bank or cash account at R2, income received in advance, or this is also called as unaccrued income, credit. When income received in advance is adjusted to income, that means the period has lapsed now, it becomes income for us. We have provided the services, now we can adjust the advance as income. So we can now pass the entry income received in advance account debit to income account. So this is the entry we pass when the income received in advance becomes an income for the business. So these are the scheme of entries we pass when we deal with income received in advance. I'll repeat the entries once again. When income is received for the accounting period, we pass the entry bank account at R to income. If we receive income pertaining to future accounting periods or future services to be provided, we pass the entry bank account at R to income received in advance. When income received in advance has to be adjusted towards income, we pass the entry income received in advance account at R to income account. So these are the entries we have to learn and practice for income received in advance. Thank you.